but we haven't finished learning outcome 5. Sorry, it's not a 4, it's uh, learning outcome 5. Because learning outcome 4, as you can see in your lecture slides, learning outcome 4 is not given in your lecture slides, which means it's not part of your syllabus. All right. So we study learning outcome 1, 2, 3, and 5. All right. So we start with learning outcome 5. All right. Once we finish learning outcome 5, then you can ask me a question regarding topic 3. Sorry, it's not a topic 2. It's topic 3, which is accounting for labor. So topic 3 is accounting for labor. That is your topic 3. So let's start with learning outcome 5. So what is learning outcome 5? Before we move on to learning outcome 5, I give a quick glance over the information that we learned in the last lecture. All right. In the last lecture, learning outcome 1, we studied different kinds of calculation method, that how do we calculate the different types of different method to estimate the labor cost. Like we studied 3 different kinds of method. The first one is was a labor rate plan, right? Second one was a piece rate plan, and third one was a modified wage plan, which is the combination of hourly rate and the piece rate, all right? And learning outcome 2 about the procedure of controlling labor cost, means what kind of documents involved or what kind of process involved to record the labor cost. In this learning outcome 2, we also studied about the different kinds of forms that we also use to record the labor cost, like as timesheets or payroll form and so on, right? In learning outcome 3, we learned about accounting for labor cost. All right, in accounting for labor cost, I want to give a quick glance over this accounting for labor cost. All right, so keep in your mind that we have material accounts, all right, labor accounts, and we have factory overheads accounts. All right. So in material accounts, we have, of course, direct material, we have indirect material. In labor, we have direct labor, we have indirect labor. All right. So remember that work in process accounts, and then we have finished goods accounts. Right? So these kinds of accounts involved when we record even material cost or labor cost. Right? So at the same time, you understand both kinds of way to record. If you have material cost, how you record material cost. If you have a labor cost, how you record labor cost. All right. So as you can see that you have material account, labor account. So remember, direct material will transfer to work in process. All right. Direct labor will also transfer to work in process, or any other kinds of direct expense that also belongs to work in process. All right. Because directly involved in process. Work in process means production. All right. And overheads. Indirect, remember when I explain you about topic 1, you learn about the different kinds of cost, direct material cost, right? Indirect material cost, direct labor, indirect, direct expense, indirect expense. So the idea is that overhead cost is a combination of indirect material, indirect labor, or any other kinds of cost. All right. So indirect material will transfer to factory overheads or overheads, same thing, right? You can call it factory, factory overheads or overheads. So indirect material and indirect labor, right? That will transfer to the overheads, right? So once we have total overheads, that's my total overheads, and that's my total direct cost or total manufacturing or direct manufacturing cost. So these kinds of cost, this and this will transfer to finished goods. This will transfer to finished goods. So finished goods is a combination of three main kinds of cost. You can say that direct material, which comes from work in process, direct labor, which also comes from work in process, and factory overheads or overheads. All right. So that is your total manufacturing cost. And this total manufacturing cost will transfer to cost of goods sold. All right. So that will transfer to cost of goods sold. All right. So this is basically the process to records material cost or labor cost. So if you're talking about recording material cost, direct, indirect, direct, indirect. If you're talking about labor, direct and indirect. If you're talking about overheads, which is your topic 4, today's lecture, right after topic 3. Overheads means you have indirect material, indirect labor will transfer to factory overhead. And then factory overheads is belongs to finished good, because finished goods means product is finished. All right. Product is ready to use. Product is ready to use means now we have a total manufacturing cost. And you know that total manufacturing cost is a combination of 3 types of cost: direct material, direct labor, and overheads. Exactly. Product is finished is a combination of 3 kinds of cost, right? And then these 3 kinds of cost will transfer to cost of goods sold. And you know how to estimate cost of goods sold. So cost of, another name of cost of goods sold is a manufacturing cost, combination of all kinds of cost. And then cost of goods sold will transfer to income statement or profit and loss accounts, right? That's the way to recording your either material cost, labor cost, or overheads cost, right? So that's the ideas for your learning outcome 3, all right? Now we move on to learning outcome 5. Learning outcome 5. Accounting for labor. Right? Accounting for labor. Okay. So learning outcome 5 is about the estimate the labor cost for some kinds of special problems, or some kind of special kinds of labor cost. That is the labor cost, the money we are paying to the worker, but that's labor cost is not a simple labor cost. It's not that you work these hours and I give you money. It's not like that you produce these products and I give you money. It's different. It's different than your normal routine, right? It's some kind of different information or some kind of special categories of the labor cost. If those categories fall in that labor cost, it will not treat it as a simple labor cost, or it will not be treated as a simple direct cost, right? Direct labor cost, right? So we call it uh, we call it uh, special labor cost problems. Special labor cost problems. Now, what does it mean, special labor cost problems? It means a special kinds of labor cost which is not fall in the normal routine of the labor cost. All right? Special labor cost. Special labor cost are those kinds of labor cost which do not fall in the category of special labor costs are those costs which are not a normal labor cost. All right, some kind of additional labor cost. All right, it's not a normal routine of the business. All right, so such kinds of labor costs may not paid to every worker, right? So these kinds of labor cost or these kinds of labor are not received by the everybody in an organization, some kind of special people, all right? So that's why we call them special labor cost, right? What is that? What are the categories of that kind of things? So the first one is the shift premium. Shift premium. Shift premium. You know that night shifts, right? So any kinds of night shifts which is fall on some special days, right? So that's called the shift premium that I explained in the previous lecture. So remember, if you have any kinds of shift premium, that shift premium is not your direct labor cost. It's not your direct labor cost. Shift premium will be treated as indirect labor cost, which means it belongs to factory overheads, right? It's a factory overheads, indirect labor. All right, so let me write down here. For example, shift premium. Shift premium is your indirect labor cost. All right. Next one. Next is a pension. So what does it mean, pension? I hope you know this word pension, or maybe you heard somewhere previously. Now, what does it mean, pension? Pension means promise to pay money to the worker after the retirement, all right? So, promise to pay after retirement. Worker is retired, right? No longer working in a company, all right? So company will pay money to that worker every month or every week, depends. So that's kind of payments called as a pension, all right? So this pension is your labor cost because you are paying to your worker, but that will not treat it as a direct labor cost. No, it will be treated as indirect labor, which means it's part of your factory overheads, right? Another one is a pension, right? So that's part of your factory overheads. Now, now there are two types of pensions. Pension plan means how do they receive money, or how, what is the criteria to estimate the money that they will receive after retirement. So value of pension money. So there are two kinds of plans we have. One is a contributory plan and second one is a non-contributory plan. So contributory plan and non-contributory plan. Now, what is the difference between contributory and non-contributory? In contributory, both will contribute in your pension amounts. Both will put money in their pension accounts. All right? Both will contribute. Both will contribute means employees and employer. Employer is a company. Both will contribute. Employees, worker, and company. So let's say employees will contribute 50, and whatever money employee is contributing, let's say I am contributing $1,000 in my pension, uh, my company will also contribute 1,000. If I contribute 1,200, company will also contribute 1,200. If I contribute 500, company may contribute 500 too. So this is called contributory plan. Both party will contribute, employee and employer. And non-contributory plan, only one party will contribute, which is a company. Employee do not contribute it. Only contributed by a company. Only company will contribute. So that's called a contributory plan, right? Okay. So that's the ideas behind a pension. So pension will be transferred to factory overheads. So let me write down here. So factory overheads, right? Here also factory overheads. So shift premium will transfer to factory overheads and pension also transfer to the factory overheads. Next one is bonuses. Bonus. Right. So bonus is a kind of extra monies worker or employees of the company, they get it besides their normal working hours. Right? Like as for example, in Vietnam, worker they receive a Lunar New Year bonus. So maybe 1 month, 2 months, depends upon company how many months they bonus they give to their employees. All right. So that's bonus is not direct labor cost. that bonus also your factory overheads. Right? That's part of your factory overheads. That's kind of bonus. All right. Next to bonus is vacations and holidays. Vacations vacations and holidays. Vacations and holidays. So sometime company gives some kinds of benefits to their worker besides bonus, right? Besides incentives, besides commissions, right? So company give them some kinds of vacations, company pay money for their vacations, go to foreign country or go within the country, all right? Or sometimes paid holidays. Paid holiday means you will have holiday, but company will pay you money for it. All right, not Saturday or Sunday. Besides Saturday and Sunday, in a year you can take 10 days, 15 days, 20 days. It depends upon company how many paid holidays, we call them paid holidays, how many paid holidays company allow you. All right, so you can take that holidays. Reasons could be anything, maybe because of the your health reasons, you got sick and then you take that holidays, or maybe some other personal reasons. All right, but you will not go to company, but company will pay you money for it. All right, that's the meaning of paid holidays. All right, so these kinds of vacations and holidays also treated as a factory overheads. All right, so which means here we have shift premium, we have a pension, then we have bonus, then we have vacations and holidays. All right, so these kinds of uh, cost will be treated as a special labor cost, which means these costs are not part of your direct. This is part of your indirect labor. So which means indirect labor means factory overheads. All right, so that's the ideas behind your uh, indirect labor cost or some kind of special cost. All right, so that's the ideas behind it. All right, so that's the idea of uh, learning outcome 5. Right, now there is another name of such kinds of special labor cost, which means shift premium, pension, bonus, vacations. All right, so we have another name for this kind of special cost. The another name is, we also call it fringe benefits. All right, the another name of such kinds of special labor cost is a fringe benefits. All right, so fringe benefits means any kinds of other benefits like this, they get it besides the salary. All right, apart from salary, worker they receive that kind of benefits. We also call it fringe benefits. So all the fringe benefits means all these kinds of benefits will transfer to the factory overheads. It will be treated as your indirect labor, right? That will not be treated as your direct labor, right? So keep in your mind. Right? So that's all about your learning outcome 5, and that's all about your topic 3, which is accounting for labor, right? So topic 3 is finished. All right. So if you have any question regarding this topic, please feel free to ask me if you have any question. Anybody has any question regarding this topic 3? If no questions, then we move on to next topic, which is topic 4, accounting for overheads. So any questions about labor?
Yes, I have.
Yep.
What is the difference between employee and employer in contributory plan?
Mm-hmm.
And it's just like they contribute for both. This means that the employee and employer can also contribute in that contributory plan.
Yes, it's a pension. Now, what happened in the pension? For example, I am working in a company. I want, after my retirement, I receive a fixed amount of money every month. So I start contributing money in one kind of accounts. That account's called the plan. All right. So I'm gonna contribute my money in that plan, in that account. So when I retire, before retire, I cannot take that money. So once I retire by the age of 58, 60, depends upon countries to country. So let's say I retire by the age of 60. So every month I start receiving money from that account. Right. So this is the criteria. This is the main ideas of the pension. Now, contributory plan means I contribute some money and company also contribute money. So that's the meaning of contributory. Two parties are contributory. So we also call it partially contributory plan. Partially means in that account, some part will be contributed by me and some part will be contributed by the company. Both. All right, both parties will contribute. That's the meaning of contributory plan.
Okay, thank you. I understand.
Anybody, any other question? Any questions? Or we move on to next topic? Please say something. Move on to next topic. Can you send back? Okay, one student, I don't know, he or she sent me a message that can you send back the example of FIFO LIFO moving average method? You want me to repeat again that method? I suggest you please go back to the video, two video recording videos and the YouTube video, my YouTube video. So please go back to that video and have a look. If I repeat all these three method, which is accounting for material, LIFO, FIFO, and moving average, it's going to be really time consuming. So because we have a limited time, all right. So better you go specific to a specific problem instead of just giving me the whole question. All right. So I suggest you please go back to that recording, Zoom recording video that I also already sent you before. So please go to that recording and then you point out exactly the question that you did not really understand. But if I go to whole life of a moving average, I think it's really time consuming. All right. So please, when I am giving you a session, so please be focused. All right. Otherwise, because I also ask you many times that please ask me a question about material, but none of you asked me a question. But now you are raising question about the previous topic, which is quite old that we covered the last week. So please send me email about the questions that you are asking about life of FIFO moving average. So please go detailed question, specific question, not as a general question. All right. Okay. And so someone said, yes, please move on. Okay, so we move on to next topic. So we have just only 1 minute left. So after 1 minute, we will start the next topic, which is accounting for overheads. All right. In this, after this topic, I will discuss about your assignments. That's so. Let's start with the first learning outcome for accounting for overheads. And make sure you pay attention. You listen carefully. All right. Learning outcome 1, which is introduction. Now, what is overheads? You know the meaning of overhead. So overhead is any kinds of expense that indirectly involve in production. Any kinds of factory indirect cost, right? Indirectly involved in production. It's called a factory overheads, right? Another way to understand overhead is any kinds of cost. For example, this is a pen, all right? Manufacturing of this, the manufacturing cost of this pen is a $5, all right? Besides material and labor, whatever cost involved to produce this pen is called factory overheads. Besides material and labor, whatever money we spend to produce the product called factory overheads, right? Now, factory overheads, there are three kinds of factory overheads. We have indirect material, indirect labor, and some kinds of other. So the best example of indirect material is any kinds of cost that's indirectly involved in production. Any kinds of material cost indirectly involved in production called indirect material cost. All right. So the best example of indirect material cost is a wastage. All right. Worker who wasting the raw material. All right. That is example of indirect material. Maybe some other kinds of indirect material. But this is one of the very basic example to understand indirect material cost. All right. Next is indirect labor. Indirect labor means the people who are indirectly involved in production. All right. So who indirectly involved in production? Anybody working in a factory but not working on machine. All right. What is who are the example? I mean, which kinds of people involved in that kind of um, activity? All right. Indirect labor people. All right. So the example of indirect labor is a supervisor. Supervisor who supervise the people, the workers in a factory. All right. So the another examples of indirect labor could be a security guards who taking care of all the factory assets, either machines or the inventory. All right. Security guard. Right? So that's also part of your indirect labor. All right. Next is other. Some other kinds of other kinds of overheads besides indirect material or labor. So in this other involve depreciation, right? The value of money goes down over the period. That's called a depreciation. So that's part of your uh, uh, other. Another example is factory rent, right? Factory rent. Let's say we are renting a factory, and over the period we have to pay a rent. So whatever money we pay as a rent, that is your other indirect. Right? Next is maybe we bought some insurance for our factory assets, all right? And we have to pay insurance premium every month or every week or every period. So that insurance premium or insurance cost also your other cost. Insurance, all right? So these are the very common ideas behind the uh, the overheads, all right, or indirect manufacturing cost, all right. Okay. Now uh, move on to the next part of your introduction, which is accounting for overheads. Right? Accounting for overheads. Accounting for overhead. So we're gonna have a look some other important things we need to know when we are estimating the overheads. All right. One thing remember from this topic, you're gonna study two important calculations. Right. Two learning outcomes is about calculations. All right. And that learning outcomes gonna be in your assignments and in your final exams, both. All right. So this topic, accounting for overheads, is very, very important. All right. So accounting for material calculation and accounting for overheads calculations. All right. So please be focused. Now, accounting for overheads. In accounting for overheads, we need to uh, focus on few things. All right, we need to understand few things before we estimating the factory overheads. Right. First thing is first thing we need to identify is a cost behavior. Right. Cost behavior or cost classification. Right. If you want to calculate your factory overheads, you need to understand what is the behavior of that particular cost. All right. So cost behavior classify into four parts. All right. There are four kinds of cost behavior. This is learning outcome two. So these four kinds of cost behavior involve fixed cost, variable cost, semi-variable cost, and step cost. Right? So these four kinds of cost is your cost behavior. So you have to understand it before we calculate it. So this cost behavior we study in learning outcome 2. Right? Next one is a budgeted factory overheads. Budgeted factory overheads. Right? Budgeted factory overheads. Now, what does it mean, budgeted factory overheads? Same like as, okay, let me write down something. Um, so types types of cost. In your previous lectures of management or cost accounting, you understand the types of cost mainly classify into three parts. Right? So there are three types of cost. direct material, direct labor, and overheads. All right. And in other words, we can say that cost divide into two parts: direct cost and indirect cost. I'm talking about manufacturing, right? Direct cost and indirect cost. These are your direct cost, and this is your indirect cost, right? And you know that compared to indirect cost, direct cost are easily to identify, all right? I repeat, compared to indirect cost, direct cost is easily to identify or easily to trace or easily to track. But overheads cannot be easily identified. The reason behind is the nature of indirect cost. So nature could be wastage, nature could be supervision, or nature could be depreciation. All right. Because of this nature of these kinds of cost, we cannot easily identify that how much gonna be a overheads cost for the future. All right. So by that reason, it's really important to provide the accuracy over the estimation of budgeted factory overhead. So the meaning of budgeted factory overhead means forecasting factory overheads. All right. Forecast factory overheads. How can we forecast factory overhead? So we have two methods to forecast factory overhead. In these two methods involved traditional costing method, all right, and activity-based costing method. We call it ABC, right? So we have these two methods that you will study in your learning outcome. Yes, learning outcome 6. We will study in learning outcome 6. This budgeted factory overhead. How do we calculate budgeted factory overheads? Right? And cost behavior, you will study in your learning outcome 2. All right? Cost behavior. All right? Okay. Next one. Accumulates actual overheads. Right? Next is accumulates actual overheads. All right. So this is the plan. This is the plan. How we are planning that how much money we spend to how much overhead money or overhead cost we spend to produce this pen. We are planning, right? We whatever we do in an organization, we make a plan. That's called budget, right? So we're gonna plan that how much money we're gonna spend to produce this pen. That's called budget, right? And at the end of the period, we actually produce this pen, of course, actually produce this product, and then we will see how much actually we spend overhead cost. This is called accumulates actual overheads, right? Another way to explain it, for example, you come to this semester, all right? And for example, today is your first day in the semester. So in first day, you're gonna make a plan that how many marks you're gonna get in this subject for this semester. So you're gonna make a plan. So let's say your plan is 80% marks. You're gonna achieve 80% marks in this semester for this subject. All right. And you sit for exams At the end of the semester, after exams, you get your actual results. And then you're going to compare it, all right? Whether you achieve or you did not achieve, all right? So you're going to compare. That's comparison called over and under apply. Over and under apply. All right. This is the comparison, the difference. It's called over and under apply. All right. So this is your learning outcome 7. Learning outcome 7. This one and this one. That is your learning outcome 7. So this is the main ideas for this topic, what you're going to learn it. All right. Besides that, besides these other two methods, you're gonna study about apportionment of your overheads. Someone asked me a question. Can you move your camera to the right? Move my camera to the right. Is it okay now? Yes, okay. Okay, so that's the overall picture of this lecture. So let's move on to the learning outcome 2, right, which is cost behavior, right, or cost classification. So topic 4, learning outcome 2, right? So learning outcome 2 is cost classification, right, or behavior. This could be learning outcome. Maybe if you look at your lecture slides, it says learning outcome 1, but that's fine. All right, introduction is going to be your learning outcome 1, and this is your learning outcome 2. But of course, whatever information is given in the lecture slides, all the information I'm going to cover here. All right. Okay. So in learning outcome 2, we will talk about cost behavior. Right? How does cost behave? Right. So cost behavior divided into 4 types of costs that I already told you. In these 4 types of cost involve fixed cost, variable cost, semi-variable cost, and step cost. All right. Fixed cost, variable cost, semi-variable cost, and step cost. Students, these types of cost I will not go in detail. You have to watch the video, all right, or you can download, all right. You have to watch the video for your topic 4. But here, I won't go in very detail. I will give you very quick ideas with examples. But if you watch my video, the YouTube video, in video, I draw a diagram. I draw a 4 graph. One graph for fixed cost, another graph for variable cost, third graph for semi-variable cost, and fourth graph of step cost. These graphs are very important. All right. So I want you to later, after this session, you go to YouTube and you can check, all right, what diagrams I was talking about. All right. So please, that's the reason I asked you to watch video before you comes to this session, so it's much more easier for you to understand it and you can quickly raise questions. But now probably you cannot, because this is the first time you are studying this topic for. All right, so please go to your video. All right, so let me write down here. Graphs. All right. So I explained about 4 kinds of graphs: fixed, variable, semi-variable, and step. But here I'm going to tell you what does it mean: fixed, variable, semi-variable, and step, and what are the examples. But I repeat, graph also important. Right. Now, what does it mean? Fixed cost. Fixed cost means any kinds of cost that remain unchanged, that do not change as per the level of activity. So which means your level of activity increase or decrease, but your cost is fixed. All right. In simple words, you produce one product, you produce 100 product, or you produce 1,000 product. Some kinds of cost do not change. They always fix. That's called a fixed cost. All right. I repeat, no matter you produce one product, 10 product, 100 product, or 1,000 product, that cost will not change. All right. That's called a fixed cost. All right. Okay. Now, what are the example of fixed cost? Right. What kind of cost that do not change? All right. So the example of fixed cost is a depreciation on the machine, right? Or on the equipments. Depreciation. For example, we have one machine which produces product. So no matter you produce one product, you produce 10 product, or you produce 100 product, or you do not produce any product, the value of machine will change over the period of time. It's not affected by the level of production. It will not affected by the number of units that we are producing. So that kind of cost is a fixed cost. All right. Another example of fixed cost is a factory rent. Renting a factory. All right. If we are renting a factory, we are paying rent every period. Um, no matter you produce one product, 10 product, 15 product, or 100 product, your factory rent will not be affected. That's called a fixed cost. All right. Okay. So that's the ideas behind the fixed cost. Maybe we have some other examples about fixed cost, like as insurance premium. That could be a fixed cost. Why? Because again, it has a no effects from the manufacturing units. All right, it has a no correlations with the manufacturing units. No matter units increase or decrease, your insurance premium will be unaffected. All right, so which means remain same, right? Unaffected. Now next is a variable cost. Variable cost is the cost which, the meaning of variable, variable means which is not same, not fixed. That's called variable. So variable cost means any kinds of cost which change as per the level of activity. In simple words, your production increase, your cost increase. Your production decrease, some kinds of cost decrease. High production, high cost, low production, low cost, no production, no cost. All right, that's kind of cost called variable cost. All right, so what involved in variable cost? Variable cost involve material cost, all right, or direct material cost. So direct material cost. This is your variable cost. Why? Because if you produce more product, we consume more material. Produce less product, the usage of material will be less. Right? So that's why direct material cost will be considered as your variable cost. Another example of variable cost is a direct labor cost. Direct labor cost, again, variable cost. Why? We produce more product. We need more people. Produce less product, worker will work less hours, labor cost will be low. All right. We do not produce any product. We don't have to pay any direct labor cost. All right. So that's the ideas of the variable cost. Another examples could be some other kinds of direct cost, which is directly involved in production, directly affected from the production. So the example is like as electricity for the machine that will run to make product, all right? Electricity, right? That electricity involves in producing product, all right? If machine will run more, we need more production, more product, machine will run more, all right? If machine will run more, we have to pay, we're gonna use more utility, all right? So as a result, my electricity cost will increase, all right? Production is less, machine will run less, electricity cost, electricity bill will be less. We do not need to produce anything because no demand in the markets. Machine will not run. Electricity cost for machines, electricity bill will be reduced. All right. So that's the ideas behind the cost of electricity, which is also a variable cost. Right? Next is a semi-variable cost. Semi-variable cost is the cost which is combination of. So semi-variable cost. So semi-variable cost is a cost which is the combination of fixed and variable cost. All right. Sometimes we call it semi-variable cost, or sometimes we call it semi-fixed cost. Same thing. All right. Now, semi-variable and semi-variable or semi-fixed cost is the cost which is the fixed at the first, right? But after a particular units later, right? Or after a particular units, the cost will convert into variables. At the first, it's a fixed, but if you cross that units, it turn into a variable, and it will remain variable. It will not come back to the fixed cost, right? So what are the examples of the semi-variable cost? So semi-variable cost example, Semi-variable cost. Semi-variable cost example is for example, your 3G or 4G internet. All right. So, for example, in 100,000 Vietnam dong, you get I don't know, let's say 300 MB internet, right? 300 data, 300 MB data, you got it, right? So what does it mean? It means if you use 1 MB or 300 MB, no matter you use 0 MB, you do not use any internet, or you use 1 MB or you use 300 MB, your cost is a fixed, which is 100,000 Vietnam dong. But if you cross that limit, so let's say you use 310 MB. So which means it's a combination of 300 MB, which is fixed cost, 100,000 Vietnam dong, all right? And you use 10 MB extra. So 10 MB is a variable because after 300 MB, company gonna charge some money per MB. So let's say company charge 1,000 Vietnam dong for 1 MB, all right? So you use 10 MB. So what does it mean? 10,000 Vietnam dong, all right? 10,000 Vietnam dong is your variable cost. So your semi-variable cost will be 110 Vietnam dong. All right. So if your usage will increase, you use it more, 10 MB, 20 MB, 30 MB, your cost will increase, 10,000, 20,000, 30,000, so on. So this is your variable cost. This is your fixed cost. Fixed plus variable is your semi-variable cost. All right. So that's the ideas behind the semi-variable cost. It's a combination of fixed and variable. Another example could be a water supplies, maybe the water bills in Vietnam. All right. So there is some kinds of limit for the water. If your water consumption is that much, you're gonna pay a fixed money. But if your consumption is above, then government gonna charge some amount of money, which is, I don't know, something per liter. If you're using 5 liter extra, then your cost will be increased. If you're 10 liter, 30 liter, 40 liter, so on, your cost will be keep increasing. So that's the ideas behind a semi-variable cost, right? Okay, now move on to the next cost, which is your step cost. So what is step cost? Step cost is the cost which is also combination of fixed and variable cost, but this fixed and variable cost occur simultaneously, which means these two types of cost occur at the same time. Fixed variable, unlike semi-variable. In semi-variable, fixed first, fixed finish, and then variable. That's semi-variable. Step means fixed variable, so it turns into a step. Why we call it step? So you will understand if you watch that video, all right, graph. So I'm gonna give you some example of this step cost, right? So example of step cost, like as your motorbike or your vehicle's wheel or tire, right? I hope you know wheels or motorbike tire. All right. So take example of car or vehicles wheels, because in company we have a vehicles, right? So for example, the life of one tire or one motorbike vehicles is maybe 5,000 kilometers. All right, 1 kilometers to 5,000 kilometers. All right, and the cost of one tire is $100. All right. So for example, if motorbike tire, we bought it, so means we paid $100, and the life of the tire is a 5,000 kilometers. So which means after 5,000 kilometers, we have to change our tire. So which means our cost will increase. All right. So in step cost, within a categories, the cost is same. But if you cross that category, cost will increase. When cost will increase, you have another category or another window. All right. So you bought a tire $100. All right. So the window for that tire is a 1 kilometer to 5,000 kilometers. So no matter your motorbike run 1 kilometer or 5,000 kilometers, your cost is fixed, which is $100. But once 5,000 limits finish, your motorbike run more than 5,000. So it's time to change your tire. So your cost increase, which means another $100. All right. You spend another $100. So you have another 5,000 kilometers. So this is called a step cost. Within the limits, fixed. But if you cross the limits, it turns into variable. All right. Cost change. And then another limit. So another variable cost has a fixed limit. All right, this is called a step cost. So that's the example of this step cost. Another example of step cost is a supervisor. Supervisor. So let's say one supervisor cannot supervise unlimited group of workers. All right, supervisor has a limit of the worker. So let's say one supervisor can supervise 15 workers. All right, in our factory we have 15 workers, so the cost of supervisor is just a one supervisor. So let's say we pay $1,000 to one supervisor. All right, so for 15 workers, cost of supervision is a $1,000, which is for one worker. So let's say now we have a 25 workers. So in 25 workers, one supervisor is not enough. So we need a two supervisor. One supervisor for 1 to 15 workers, and second supervisor for 15 above to 30, because one supervisor can maximum supervise 15. Second supervisor, another 15. All right. So for 30 worker, cost of supervision will be $2,000. For 25 worker, cost of supervision will be $2,000. So this is the example of the step cost. All right. So it's look like step. All right. It looks like a step. All right. Why it look like step? Again, you go back here to watch the steps. All right. So that's all about your learning outcome 2. Learning outcome 2 is finished. All right. Now we move on to the learning outcome 3. Learning outcome 3, if you have a look your lecture slides, let me show you. Here is your lecture slides, learning outcome 3. Here, not here, budgets plan here. Budgeted factory overhead cost. Let learning outcome 3, I will not speak much more about learning outcome 3, but I will give you very basic information for learning outcome 3. I mean, in learning outcome 3, we will study that how do we estimate the budgeted factory overheads. All right. Learning outcome 3. Let me write down here. Learning outcome 3. Learning outcome 3. I won't go more in detail because it's just a basic information about that how we estimate the budgeted factory overheads, right? Okay. Estimation of budgeted factory overheads. All right. Estimation of budgeted factory overheads. Remember, budgeted factory overheads means forecasting fixed overheads. How much gonna be a fixed overheads or budgeted, I mean, how much gonna be a fixed overhead in the future? Sir, I cannot see the board. You can't see the board or you see the blur? Is it blurred? Or you can't see at all? Can I make it zoom? Is it okay now? Can you see that? Yes, okay. All right. So budgeted factory overheads means when we are estimating factory overheads for future. I mean, in future, how much gonna be a factory overhead or forecasting a factory overheads. So remember, budgeted factory overheads always estimated in terms of quantity. All right, I repeat, budgeted factory overheads always will be calculated in form of quantity. So means how much quantity of units cost will be equals to the budgeted factory overheads, right? I mean, in other words, we can say that budgets will be estimate in a quantity, all right? Okay. And if you want to make a budgeted factory overheads, you always, all right, you always identify your cost. Is it fixed or it's a variable, right? Your cost is fixed or variable. So in simple words, in order to estimate budgeted overheads, you have to classify your cost into different categories, right? You have to classify your cost into different categories, right? So let me explain you. For example, as I said that if you want to estimate any kinds of budgets, if you want to estimate the plan that how many units you want to make it, your budgets, your plan will be always in form of quantity. All right, how many quantity you want to produce it, right? So once you identify how many quantity you want to produce it, then you will find out that in this quantity of units, how much are fixed, how much are variable. Some quantity of units may not change over the period, and some will be changed over the period. That's called the variable, right? Depends upon the economic situations, depend upon the markets, depend upon any other factors that may give impacts over the production, right? So that's called the variable. So that's all about your learning outcome 3. All right. So idea is that before uh, we start producing, we have to identify that in our budgets, in budgeted units, how much are fixed and how much are variable. So that's the overall ideas behind your learning outcome 3. Right? So that's all for learning outcome 3. Now we move on to the learning outcome 4. So don't worry about the numbers and the calculation which is given in your lecture slide. So don't worry about it. We just focus more on the theoretical parts here, right? So let's move on to learning outcome 4. Topic 4, learning outcome. Learning outcome 4 is about accounting for overheads. How do we records our overhead costs in our accounts with the help of the T accounts or the ledger? How we records the information in the ledger accounts? Which kinds of ledger accounts we gonna prepare? All right. So I think I should give you example of this one here. This example, all right? The example that I explained in our topic 3, all right? Whatever procedure is given in this example, we apply the same procedure to estimate the factory overheads. All right. So for example, if you are recording your factory overheads, so again, in material accounts, you have a direct material, indirect material. Indirect material will transfer to factory overheads. In labor accounts, we have a direct labor, indirect labor. Indirect labor, of course, it's the overheads, will transfer to factory overheads. All right. But beside indirect material or indirect labor, we have some other kinds of overheads, like as depreciation, like as rents, like as insurance. So we can prepare some other kinds of T accounts which belongs to factory overheads. Let's say here. Let's say depreciation accounts, rent accounts, and maybe insurance accounts. All right. So we have some other kinds of accounts. All right. So so remember, this depreciation will transfer to factory overheads. Rent will transfer to factory overheads. Insurance will also transfer to factory overheads. All right. So any kinds of indirect indirect manufacturing cost we have will transfer to the factory overhead. So here we can write down depreciation, we can write down rent, we can write down insurance. All right. So this is the procedure for um, accounting for overheads. So this is the way that we do. So with the help of these diagrams, you can understand what is the procedure for accounting for labor, accounting for material, and accounting for overhead. So once you have a total factory overheads, that will be transferred to the finished goods, and then finished goods to cost of goods sold, and then income statement or profit and loss accounts. All right. So this is the ideas behind your learning outcome 4. So for your learning outcome 4, I will write down sheet 1. So that's your sheet 1. All right, that is your sheet 1. All right. So sheet 1, topic 3. Sheet 1, topic 3. So this sheet 1, topic 3 explain about accounting for overheads. Right. So it's explain about accounting for overheads. So that's the ideas for your learning outcome 4, right? That I already covered. All right. So now we move on to the learning outcome 5, which is a calculations part. All right, which is the part of your calculation. Right. Before we move on to the calculation part, do you have any question? Learning outcome 5 is the calculation part. So do you have any question about learning outcome 1, 2, 3, 4? Anybody has any question? Or we move on to learning outcome 5? Tell me, any question? Say something, yes or no? Move on. Please say something, move on, or you have a question? Let's move on, okay. Okay. Now learning outcome 5. Now what is learning outcome 5? So okay, you know that factory overheads is a part of total cost. All right. And keep in your mind that whatever departments involve in a product, any kinds of department that involve to support manufacturing, we should use that departments to calculate factory overhead cost. All right. I repeat again. When we calculate factory overheads, so the meaning of factory overhead is a manufacturing cost, which is indirect, right? Indirect manufacturing cost. Of course, production department involved in a manufacturing cost. I mean, production department involved in manufacturing, and some could be indirect manufacturing. All right, so indirect manufacturing is the overheads. All right, but besides uh, production department, some other kinds of departments also to involve in producing manufacturing involved in producing manufacturing or involved in production. So that department cost will be considered as a factory overhead because they are supporting, all right? But they are supporting manufacturing indirectly, all right? So let me give you example of this. Let's say human resource department, all right? What is the job of human resource department? To supply manpower, to supply workforce, all right? And they are providing services, that means supplying a workforce, all right? If no workforce, no production, all right? If no labor, no production. So that's why can we say that human resource department, which is not a production department, support to produce product? Can we say that? Yes, we say that. All right. So in order to understand this kinds of thing, uh, I'm going to draw a small diagram. With the help of diagram, you will understand that what's going on to estimating the factory overheads. So I repeat again, when we are calculating factory overheads, factory means production, all right? So don't think that in factory overheads, only production department involved. Don't think that factory overhead cost only comes from factory. That factory overhead cost comes from another department as well, which is not a production department like as human resource department. All right, other department also involved, and other department providing services means cost. All right, so another department providing a services, another department incurred a cost, so that cost also part of the factory overheads. Keep in your mind this thing. So let me write down so you will understand that in a better way. Okay. So in factory overheads, not only production department involved, some other department also involved because they are providing service. And without these department involvement, production cannot be completed. For example, human resource department. If we do not have human resource department, if human resource department do not provide service, which is providing people, if human resource department do not provide people to the production department do not have enough people, or production department do not have a worker to work. As a result, no production. All right. But human resource department not producing product directly, of course. So human resource department indirectly involved in manufacturing. So which means human resource department cost should be considered if human resource department is providing services to the production department, and the cost will be known as factory overheads. Right? Same thing here. Accounts department. Accounts department is involved to recording all the kinds of activity going on in a production department. So account department can estimate the production cost. So which means account department also providing services to the production department. Remember when I explained you about accounting for material? In accounting for material, I draw a diagram. The diagram about ordering, receiving, and using raw material. How we order, how we receive, and how we use material. All these kinds of activity belongs to production department. But there is a one more department involved besides production department. That department was a accounts department. So which means account department providing services to the production department, but account department not directly involved in production. Account department indirectly involved in production. So that's why if account department is providing services to the production department, that cost will be considered as a factory overheads. All right, so remember. Same thing with the IT department. If any kinds of IT information, IT services, production department is taking from the IT department, any kinds of IT services, right? Any kinds of technology in which IT department involved, that kind of services cost will be part of factory overheads, right? Okay. So what is the conclusion of these things? So the conclusion is in this factory overheads, in this factory overheads, we have two departments involved, right? Two departments involved. This department in our production department and a non-production department or a service department. Any kinds of department that is not involved in production, that department called a service department, but that service department providing services to the production department, right? Like a human resource service department because they don't produce product. Account department service, IT service. So these are providing the services, right? Intangibles in nature, as you know them. All right. Okay. So here I'm going to define what is the ideas behind production department. What is the meaning of the production department? What is the meaning of the service department? All right. Production department directly involved. Production department directly involved, and service department